The new SpaceX ETF pays you monthly, but the question is, if you can already buy SpaceX stock, why would you ever choose this ETF instead? So the name of the fund is XSHP. It's the Kurv SpaceX Enhanced Income ETF. As you can see from this screen, this is a brand new ETF, so there isn't even a distribution posted yet because it's so new. But my focus on this video is not really to review it, it's really to understand the mechanics behind it, and here's what that means for you. How does this fund actually generate income? It's quite interesting. What's the catch? Who actually benefits? Who's the ideal investor? And is it better to hold this ETF compared to actually holding SpaceX stock? So we're going to be delving into these topics together in this video. By the way, if you're new here, I want to welcome you to the channel. My focus is exclusively on income ETFs and covered call ETFs. I do have an engineering background and I used to work in the hedge fund investment research industry. So this gives me a pretty mechanical perspective on how these funds are actually constructed and how they generate income. My goal here is to help you understand what's really happening under the hood so you can make more informed investment decisions. Now, before we begin, a quick disclaimer. Nothing in this video should be considered financial or tax advice. This content is for educational purposes only, so please always consult a financial and tax professional before you make any investment decisions. And also remember that past performance does not guarantee future results. So, without a doubt, the initial public offering of SpaceX was the largest IPO ever. It had a valuation of 1.7 trillion with a T. And on the first trading day, it actually reached a market cap of about 2.1 trillion. Now, regardless of the controversy, we can all agree that SpaceX is definitely one of the most talked about companies. Many investors love the stock, but many investors also want monthly income, which is probably the reason you're listening in right now to this channel. And that's exactly where the ETF comes in. And the way that the ETF generates income for you is actually quite unique, and you have to be aware of it. Before I get into the specifics of it, let me tell you some of the basics of this ETF. First of all, this ETF was created by Kurv, which is a company that I believe in terms of its management style. I actually covered another fund that focuses on silver in this channel. Make sure to take a look at it. But if you look at the leadership that it has, it primarily comes from PIMCO and Goldman Sachs, and altogether they have a lot of experience with investment management and ETF solutions. So what is XSHP? It's a brand new, actively managed ETF. It's going to generate monthly income for you while maintaining exposure to SpaceX's share price. But of course, it's going to have limited upside because of its options strategy. So primary objective is generating that monthly income. Secondarily is capturing some of the price appreciation. So please notice that order. Income is going to come first. Growth is going to come second. So the best way to think about this objective, how they actually provide you income, is think about it, SpaceX, the company. They're going to be writing options on that stock and hence going to be collecting a premium. From that premium, you're going to be getting a monthly distribution. Now, we'll come back to exactly what those options mean because that's where the trade-off begins. Also, I did want to mention the expense ratio. That's something you got to take a look at. The fund currently has a net expense ratio of 0.99%, almost 1%. Now, the reason this ETF exists is because there's millions of investors who love SpaceX, but don't want to wait years for returns. They want the income now, and this ETF is designed for those investors. Now ask, is that actually a good deal? Well, I think to answer whether it's a good deal or not, we need to talk about what you're actually buying. So let's take a deep dive in that. When people hear SpaceX Income ETF, they imagine a portfolio filled with SpaceX stock. But that's not what I found. Look at this. The largest holdings aren't SpaceX, they're Treasury Bills, more Treasury Bills, and a government money market fund. So, wait a minute, why would a SpaceX ETF own mostly US Treasuries? Well, the answer is because this is not a traditional stock ETF. It's an option strategy. And the T-bills aren't there by accident. They're the foundation that supports the entire strategy. Notice these positions, SPCX 215C. That represents a call. Those are call options. And then we have 250, 185, 195. Notice at the bottom it says SPCX 215P. That represents a put. Those are options. This is where the monthly income is coming from. So the Treasury bills provide stability. The options generate premium, and that premium becomes the income investors receive every month. Now, here's something I thought was really interesting. The Treasury bills actually outnumber the SpaceX option positions by a mile. And that tells me this isn't simply a fund buying SpaceX and selling covered calls. This is a professionally managed derivative strategy using Treasury collateral. In other words, you're not really buying SpaceX. You're buying a portfolio of Treasury bills combined with an actively managed option strategy that seeks to produce income based on SpaceX. That completely changed the way I looked at the CTF because suddenly the 0.99%, almost 1% management fee made a lot more sense to me. You're not paying someone to buy SpaceX. You're paying someone to manage a fairly sophisticated options portfolio. Let's think about it. They have to determine what strike price they should sell at, how much upside they're willing to give away. When do they roll the options? How much premium can they collect? How much risk are they taking? Those decisions happen continuously, and that's what you're paying Kurv to do for you. If you've made it this far in the video, there's probably two questions that are going through your mind right now. And those are the same questions that I proposed at the beginning of the video. Number one, who is the ideal investor for this ETF? And number two, is buying the ETF better than owning SpaceX outright? Well, first of all, this is my opinion. And again, this is not financial advice. But the bottom line is because the CTF is brand new, we don't have a distribution history yet. That means nobody, not me, not Kurv, not anybody else on YouTube can tell you exactly what the monthly payouts are going to look over time. But here's what we did analyze today. We analyzed the structure, the holdings, the option strategy, some of the risks, the trade-off. So what I'm going to do is paint for you a few different scenarios. And I do have to specify that these are not predictions. These are basically my opinions as to how they would do based on how SpaceX does. So let's say SpaceX rallies 40%. Obviously, SpaceX shareholders are going to capture that full move. That's pretty obvious. But XSHP is likely to capture less upside because the option strategy is designed mechanically to generate income while limiting potential gains. Scenario number two, let's say SpaceX trades sideways. So SpaceX holders are going to have little appreciation. Now, for you, if you decide to acquire the CTF, an options-based strategy income may benefit from collecting premium during a flat market, although the results are going to depend on market conditions. And finally, scenario number three, let's say SpaceX declines. Both investments, in my opinion, are going to lose value. However, the option premium for the CTF may provide some offset, although it doesn't eliminate downside risk completely. To help contextualize the comparison between SpaceX, the stock, and the CTF, I gave stars on 4 different categories, and I'm going to go through each of them. So first, let's start with growth. I gave SpaceX 5 out of 5 stars possible. Why? Because when you own the stock, you get all the upside. If SpaceX doubles, your investment doubles. There are no limits. I gave XSHP 3 out of 5 stars, not because it's a bad fund, but because the fund gives up some of that upside in exchange for monthly income. And that's the trade. When it comes to income, SpaceX gets 2 out of 5 stars. Because if the stock goes up, you can always sell some shares to create your own income. But the stock itself is not designed to pay you every month. And this ETF gets 5 out of 5 stars. Generating monthly income is literally the fund's main job. And that's exactly why it was created. When it comes to safety, I gave SpaceX 2 out of 5 stars. SpaceX has huge upside, don't get me wrong, but it also has plenty of downside. If the stock falls 30%, you lose 30%. Now, XSHP gets 3 out of 5 stars. It still depends on SpaceX, so it definitely isn't risk-free, but collecting option premium may help cushion some of that ride. Just remember, less risk doesn't mean no risk. And finally, stability, otherwise known as volatility. I gave SpaceX just 1 out of 5 stars. Look, I expect SpaceX to move, sometimes a lot. And that's great when it's going up, not so much when it's going down. XSHP gets 3 out of 5 stars. The option strategy may help smooth out some of those big moves. It can still be volatile, just probably not as wild as owning SpaceX by itself. So the final verdict is this. If your goal is maximum growth, buy SpaceX. If your goal is monthly income, then this ETF is definitely worth a look. Neither one is better. They're simply built for different investors. And the real question is, what are you trying to accomplish with your money? So I hope that this helped you in determining whether this ETF is right for you. Thanks so much for watching. Here is a video I recently put out on a new ETF that focuses on artificial intelligence. Take a look at it. Thanks so much for watching. Have a prosperous rest of your week, and I'll see you in the next episode.